This is China Gateway 360. Doing business in China? You could be overpaying on currency conversion. So let's dive right into the 2026 playbook for direct R&D settlement. When you use direct RMB payments, you're essentially wiping out foreign exchange risk on the China side. By bypassing those standard 0.1 to 0.25% conversion fees that Chinese commercial banks typically charge, you're keeping a lot more capital right where it belongs, in your business.
Traditionally, you'd have to deal with a frustrating double conversion spread. You'd exchange RMB for a foreign currency and then convert it again into your local currency. But the CIPS network processes these payments directly in RMB. That means you avoid that double spread completely.
To put some numbers to that, this direct route yields a solid 2 to 5% cost savings on every single transaction. So if your enterprise handles, say, a $10 million annual volume, you're looking at retaining anywhere from $100,000 to $300,000 every single year. It really adds up. Now, looking at the 2026 regulatory framework, the People's Bank of China uses what's called a negative list approach. Basically, this just means that if a transaction isn't explicitly prohibited, it's automatically permitted. In terms of what's actually eligible, current account activities like trading goods and services are fully liberalized. On the other hand, capital account transactions, such as cross-border loans, are managed within macroprudential limits, but they absolutely remain accessible. So how does this work in practice? Well, here is the standard execution process for a typical current account RMB settlement, which is by far the most common scenario for foreign-invested enterprises. It breaks down simply into 5 steps. First, you verify your counterparty's RMB access. Then you submit the application and pass the bank's compliance check. After that, you get near real-time processing through CIPS, followed by automated transaction reporting straight to SAFE.
China Gateway. Gateway.
Your gateway to business in China.
When it comes to the paperwork, current account compliance is actually quite simplified. You'll mostly just need your basic contracts and commercial invoices. For capital injections, however, you will need a bit more, specifically your business license, SAFE registration, and board resolutions. But this isn't just about cutting costs. It genuinely impacts your broader operations. Enterprises pulling in domestic RMB revenues gain natural hedging efficiencies against forex exposure, plus you get a massive upgrade in settlement velocity. And just to quantify that speed, traditional cross-border USD payments going through CIPS usually involve a 2 to 5 business day delay. In contrast, the Phase 2 CIPS network processes RMB payments in real time, giving you immediate finality. Of course, implementation does come with a few practical challenges. If an overseas counterparty is a bit reluctant due to rate volatility, you can use forward RMB contracts to lock in those rates. Also, definitely make sure your ERP and treasury systems are updated with RMB currency fields before going live. You'll find that many enterprises choose to route these settlements through Hong Kong. It operates as the primary hub here, mainly because it offers deep offshore CNH liquidity, zero capital controls, and direct access to the real-time gross settlement system. The data really highlights this reliance. Right now, over 70% of all offshore RMB payments globally are cleared strictly through the Hong Kong hub. Looking ahead at the 2026 and 2027 outlook, the CIPS Direct Participant Network has already exceeded 1,400 global financial institutions, alongside an ongoing expansion of digital eCNY cross-border trade trials. China Gateway 360 is here to help you optimize these processes. Would you use RMB for cross-border payments? Comment below.